What are to do and don't in dispersing sellers' net proceeds?
First of all, I want to say thank you for such a great turnout. It's wonderful to see so many faces here today. And to answer your question about dispersing funds to a seller, it is escrow responsibility that we disperse the funds to the owners of record. We get asked many questions to disperse funds elsewhere, especially when a property is held in a family trust. We get asked all the time if we can disperse the funds to the individuals. And the answer to that question is no. We can only disperse the funds to the vested owner. So if the owner is a trust, you need to let them know in advance that they need to open an account for us to be able to disperse the checks payable to the estate. Because if that's what, I'm sorry, to the trust. If it's owned under the trust, it needs to be dispersed to the trust. If we have 3 sellers, then the funds needs to be dispersed to the 3 sellers. So we do need to make sure that the funds get dispersed to the proper vested owners.
Okay. Question for Deanne Pope. How can I protect my client's funds?
I didn't hear that. What was that? You'll take care of it? Well, as you know, cyber theft is on the rise. One thing you can do is make sure that you know what escrow company you're working with. Do you recognize them? Are you familiar with them? Are they one of the 4 of us here at the table? And sometimes you don't get a choice, right? Because you're writing an offer and the listing agent is choosing. So when that happens, you want to just make sure of a couple of things. Ask them what bank they bank with. Do you recognize their bank? One of the recent issues that we had was with a bank called First Foundation Bank. Anyone ever hear of it? Okay, so that's your first red flag if you've not recognized the bank. Are they properly insured? Are they regulated by the Department of Business Oversight? These are all things that help keep your client's funds safe and secure. You know, the regulators require that we reconcile our trust accounts monthly. And so that would be another great question to ask. And I have these questions sitting over here in a flyer rack if you'd like them. We reconcile our bank accounts, our trust accounts, every single day. At the end of every day, we reconcile our accounts, not monthly, but daily. Another thing that's been a problem is we have wire instructions that we send to the buyers so that they can wire to us, and then wire instructions that we receive from the sellers so that we can wire their proceeds to them at the close of escrow. Probably one of the biggest responsibilities that we have in the transaction, besides paying your commission, of course, is the seller's proceeds. So we have implemented some company policies in our company to help protect their funds. And one of them is, if they give us instructions on what to do with their proceeds, it cannot be changed. If it's changed, especially in the form of an email, that's a very big red flag. That means that perhaps their account was compromised, and we take it one step further on both ends. Buyer wiring to us, because that could be a problem, or us wiring to a seller, that could be a problem. We do something very unique. We pick up the phone and we call them. And we call every single buyer and we confirm our account information with before they wire their earnest money and final deposit. And even on our wire instructions where it says account number, it says call your escrow officer to promote that dialogue. And then the same thing with the seller. If we're wiring the seller's proceeds, before we do so at the close of escrow, we call them and we talk to them and we make sure that nothing has changed in terms of that information that they gave us. So that's just another precaution that we take. It's very important.
Olympus Escrow, Lisa Andrade. What are the escrow steps?
Okay. The first thing we do is we prepare your escrow instructions. These are done on escrow holders' printed forms. All principals, both buyer and seller, sign these instructions, which set forth the parties' understanding of the transaction. An initial deposit usually accompanies the instructions for a home purchase. The instructions will include a purchase price and terms, agreements as to mortgages, how buyer's title is to appear, which is called the vesting, matters of record, subject to which buyer is to acquire title, inspection reports to be delivered to escrow, prorations, which involve taxes and insurance, date of buyer's possession of the property, documents to be signed by all parties, delivered into escrow and recorded, disbursements to be made, cost and charges, and who pays for them, and date of closing. We order the title search from the title company, which we then obtain a preliminary title report from the title company. The escrow holder examines this report for items not contemplated in the instructions. For example, if there is a lien or additional loan on the property that wasn't reported, the seller must clear any such item or it must be brought to the attention of the buyer. We also request demands or beneficiary statements. It's either a demand for payoff if the seller has an existing loan and it is to be paid in full through escrow, or a beneficiary statement if the buyer is purchasing the property subject to or assuming a loan. We also need the structural pest control reports and other reports. These reports might include plumbing or roofing reports. They all pertain to the property's conditions and are kept in escrow. The escrow holder might also obtain any necessary approvals from the seller or buyer due to information in a report. For example, whether the home needs to be sprayed for insects or it needs to be treated for termites. The reports are delivered to escrow. Accept new loan instructions and documents. This happens if the buyer is obtaining new financing for the home. The escrow holder also obtains the buyer's approval and execution of documents. The escrow agent must also satisfy all lender's instructions before using the lender's funds to complete the transaction. We also order the fire insurance, and this is usually one of the last steps, unless, of course, it's a prior to funding or prior to doc condition, then we have to order it earlier. Request closing funds. The escrow holder cannot disburse any funds until all items such as checks or drafts have cleared and become available for withdrawal. We audit the file in preparation for closing. In this step, we make sure all accounts for all funds and documents, determine that the parties have complied with all escrow instructions. Then we order the recording. At this point, the escrow holder authorizes the title company to run the seller's title and to record the necessary documents. This can happen provided no change has occurred in the seller's title since the preliminary title report was issued. And at the close of escrow, this is what everyone is waiting for to close the deal. The escrow holder can close escrow after confirming recording by preparing settlement statements for both buyer and seller, disbursing all funds, and delivering documents to the parties or parties involved.
Okay, Vanessa James. There's been a lot of talk in the industry lately about wire fraud. What should the agents be aware of, and what tips can you give the audience to avoid any potential risks to themselves and their clients?
So Deanna made a lot of good points on what we escrow officers deal with. And I want to tell you about a case that was recently filed this past May in Alley County. Basically, the complaint was from First American Title against some real estate agents and hackers that defrauded the company of over $500,000. Basically, the real estate agent's account was hacked, and a request to send sellers proceeds to another account was emailed to First American Title escrow, and funds were wired. Supposedly, the seller had a problem with his Bank of America account, and so the escrow got an email from the agent to send it to a Chase account. So escrow did what they were told. They sent the money out, but then 2 days later, the actual seller's agent called and said the seller never got the money. So if you can imagine what happened, seller filed a police report with Glendale Police Department, and it's being investigated by Secret Service. The First American Title was able to recover $186,000, but over 327 had already been dispersed in increments. Yeah, not good. So the complaint was for fraud, conspiracy to defraud, unjust enrichment, and mainly what I want you guys to be aware of was to warn the agents about is violation of this California Civil Code section 1798.815. It's regarding the protection of non-public private information and negligence, NPPI. First American alleged that the brokers, the agents, knew they possessed highly sensitive information, personal information about their clients, and that they failed to implement and maintain reasonable security measures and practices to protect that private information from the sellers, from people getting hold of it. So it's their failure, so they suffered, First American suffered great financial loss, and so they sued the agents. So I want to warn you about that. CARA actually came out with this form just recently. It's dated June 16th. It's CAR form WFA, Wire Fraud Advisory, and it strongly advises buyers and sellers to obtain phone numbers from the escrow officer. Do not ever wire funds prior to calling your escrow officer to confirm wire instructions. Orally confirm the wire instruction is legitimate. Confirm bank routing numbers, account numbers. Avoid sending personal information in emails or texts. Take steps to secure systems using your email account. So I would really encourage you guys to use this CAR form. When you send wire instructions, actually it's best if you have the escrow officer send the wire instructions directly to your clients, because majority of us have secured encrypted emails. You may not want to use your personal emails when it comes to, I know a lot of realtors, they change companies, so they use their Gmail or Hotmail accounts. But when it comes to wire and personal information like this, use your company's, because chances are your company's emails are a lot more secure than your own private ones. You also don't ever want to put wire instructions in your subject line, because the hackers, they are literally sitting by, waiting and scanning, and that's all they do. They make tons of money this way. So believe me, they'll catch on like that. Don't be cautious using free Wi-Fi, and all of us do our business over on our cell phones, at Starbucks, things like that. Don't do it. Use secure passwords. Some of us have like thumbprints on your phones. In case you lose it, all the information is on your cell phone. So be careful with that. And for the escrow, broker-owned escrow companies, some of the things that some of the escrow companies are doing is they check with their accounting departments. They go online and they check to make sure the money's there, because one of the most recent things that are happening lately is that we get these email or fax confirmation that a wire is in, and it's not really in. It's not really there. And so we think we have the money. And so, okay, we have the money, now we're going to disperse. And the money's not really in our bank account. So, if you're an escrow, a broker-owned escrow company, please, I would encourage you to have your accounting departments check, make sure the money's really there.
Alina, what are recurring and non-recurring closing costs?
Closing costs that are governed by the lender are for residential homes. We're talking about residential homes and not commercial properties. So for residential properties, when there's a credit from the seller to the buyer, a lot of lenders will only allow it if it's only for recurring and non-recurring closing costs. So what are recurring and non-recurring closing costs? The recurring closing costs are things that you pay year after year. So after the close of escrow, you still pay the fire insurance premium, you still pay for the property taxes, the PMI, the private mortgage insurances, any prepaid interest. These are items that are recurring. So these items are called recurring closing costs. And the rest of the other closing costs, the ones that you pay only one time during your escrow process, such as the escrow fee, the title fees, the appraisal, the credit reports, the notary fees, the wire fees, all the miscellaneous fees, even attorney's fees, recording fees, these are fees that you pay only one time. So home protection plans, the natural hazard, home inspections, all these are just fees that you pay only one time. So these are defined as the non-recurring closing costs. So the lender will, depending on the program that you have applied for, they do have a limitation, and when they refer to that, they do refer to, you can only credit for recurring and non-recurring closing costs, depending on the program.
Deanne Pope, RESPA, the nitty-gritty and what it's all about.
I'm going out on a limb on this one. RESPA stands for Real Estate Settlement Procedures Act, and it's the nitty-gritty, dirty word in real estate. And Section 8 forbids anyone to exchange a referral of settlement service business for a fee, kickback, or thing of value when the transaction involves a federally related mortgage loan. So at first, the concept seems simple. Do not give kickbacks in exchange for referrals. The CFPB is aggressively investigating any wrongdoing in this area. That affects you and that affects us. And if caught, the violations are very severe. They're subject to criminal and civil penalties. On the criminal side, anyone in violation of the anti-kickback referral fee and unearned fee provision can be fined up to $10,000 and imprisoned up to 1 year. On the civil side, anyone in violation may be liable to the person charged for the settlement service an amount equal to 3 times the amount of the charge paid for the service. There was a SB 133 came out a while back for title, and as everybody knows, title can't do anything anymore. Escrow is pretty much the same way. We legally, as an escrow professional, can market ourselves. We can market our service, we can market our companies, but anything beyond that needs to be fair and consistent. So if we're going to do a lunch and learn, or we're going to do something educational, we have to do it in a venue like this, like the Board of Realtors, to all real estate companies. We cannot single out one company, come to your office, and teach you anything that is against the law. So we're all still trying to figure this out, because we've all probably done it sitting here at this table. We've come to your office and tried to educate you on some form of real estate matter, like TRID, for example. But we've recently found out that's not even allowable. We have to do it in a venue similar to this, where you're all included. Or we pick a neutral place and we invite you all to come learn. That's what's fair and consistent.
Lisa, what to provide your escrow officer during the course of your escrows?
Okay, for sellers, the names of each spouse and all people who have ownership and interest in the property. If you're not sure if a person actually has ownership interest, please contact your escrow officer immediately to discuss. All contact information for all owners of the property, including addresses, emails, phone numbers, social security numbers, because the social security numbers are needed by the title insurance company, as well as by escrow to obtain and verify all payoff information for any existing liens and/or mortgages which will be paid at the close of escrow. Recent tax payment information. This is to avoid duplicate payments, as well as to prorate the current bill at the close of escrow. Loan payoff information, including names of mortgage lenders, phone numbers, account numbers, and estimated balances. The actual balances will be verified by ordering a written payoff demand during the escrow transaction, and payment in full will be made at the close of escrow. If you have an automatic debit payment, you will need to arrange directly with the lender for the termination of same. However, you must continue to make regular scheduled payments until the loan has been paid in full. Property identification, such as valid driver's license or passport. For the buyers, you want to make sure that they include their names and title as they want it to appear in the vesting. You will be provided a list of vesting options and explanations upon the opening of escrow. New lender contact information, including name, phone number, and email addresses. Insurance agent's contact information, phone number, fax number, email address, so that when we're ready to order the insurance, we have all the information. We also need driver's license or passport. It should not be expired, and the names must match because these names match. Okay, let's see. This is so that we don't cause any necessary delays, and it can cost additional costs from the lender. Closing funds must be made payable to the escrow company and in the form of a cashier's check issued by a California bank or sent via wire transfer. However, it is required to deposit any funds due in excess of $200. You may choose to deposit funds via wire transfer for any amount due. However, it is required to deposit any funds due in the excess of $250,000. Closing funds must be received at least 2 business days prior to the close of escrow. And this is just so that you can have a smooth escrow and a successful closing.
Vanessa, TRID issues. Now that TRID has been placed for months, it seems that all is going well and files are not taking as long as anticipated. What are some of the issues that escrow officers is being faced with that could affect the transactions that agents may not be aware of?
Okay, so one issue I would like to mention in general terms, because I know this can be a sensitive subject. The rules state that we are, the escrow, is to give the seller's closing statement and the seller's closing disclosure, the CD, to the buyer's lender. Under the rules, the lender has to show the payment of the transfer tax and the real estate commission on the buyer's closing disclosure. And you know what that means. If anyone is giving more to one side or the other, and I'm not talking numbers, if one side is giving more to the other, the buyer's going to know, and the buyer's agent will know. So, not all lenders are doing what's required. Some, they're going overboard, and they're actually disclosing everything. And we try to tell them, nope, you don't need to, you shouldn't do that. That's sellers, NPPI, don't give it to them. But we can't control them. They live in fear of the CFPB and all the violation fees and penalties that they might incur. So some are going overboard. And I know that CAR and NAR are aware, and they're also taking that to the CFPB and trying to have them to revisit the issue and change their ruling. But as it stands now, that's the rule. We have to give the seller's CD, the fees, the commission to the buyer's lender, and they're going to disclose it to the buyer, whether it's in escrow or post-closing. They're going to give it. So just want to make sure that you guys are aware of that, and it is part of the rule. Another issue is something I feel strongly about, and that's the issue of the lender vetting the escrow company. We're all vetted. If they ask for our business license, that's fine. But some of them are asking us for outrageous things like our financial statements, our personal information of the staff, like their driver's license, their home address, their social security numbers, and we're not okay with that. We're fighting that. They're asking for internal policies and procedures, that sort of thing. But they're also asking us to sign indemnification agreements that force us to indemnify them against any and all responsibilities and liabilities for anything that goes wrong with the loan in the future, including not being able to sell it on the secondary market, issues that affect the borrower's ability to pay back the loan. So they're asking us to sign these on the lender's instructions. We've been putting together things, package and lender pushback letters. And the thing is that we've been getting also, a lot of the escrow companies have been getting threatening emails that say, if you don't give us what we want and don't sign our agreement, that we have no choice but to stop the transaction and tell the buyer and seller to take their transaction elsewhere. to some other escrow company that's going to go along with it. They will also put the escrow company on a blacklist and destroy their reputation of the escrow company. And I feel strongly about this because I was personally told, both verbally and in email, if we're not willing to sign, they weren't going to fund my loan. I took it to the higher ups, and finally they said, if escrow cannot sign our closing instructions, we will fund this loan, but we will have to add you to our ineligible list of settlement agents. Wow. How do you think that made me feel? Yeah. Took it again, another one said, our closing instructions are, this is what came from the supervisor. Our closing instructions are written to protect our interests, and if they are not signed, my legal department has advised that we will no longer do business together. Please let me know if this is how you would like to proceed. Well, you know what? We did write to the CFPB, and we've been putting the list together, and actually, I think I'm okay to say that was rate 1. But we have, rate 1.
Wow.
Well, they were going to start doing more business with me because I was doing such a great job of the transaction until it came to this part. But we have a whole list of, we have Flagstar, there's a few. Yeah, there's a few. We put packages together. We're all under the same Department of Business Oversight. So what one entity is doing to another in our organization is just not right. So we're making them aware of it. But wanted to make sure that you guys know, because you might want to check with that lender in the beginning of the transaction or with the escrow, because if you find out at the end, sometimes you use a mortgage company, not a direct lender, and you're halfway through the transaction, and then you find out the escrow company is on the blacklist. What are you going to do? And if they say that they're not going to do business with that escrow, what are you going to do? That the client is picking, not you, really. So it's really needs to be something that's, I think, further discussed, and for you guys to be aware of that it could delay it could jeopardize your transaction, really.
CAR doing anything about that?
I think that you probably should approach them and talk to your representatives. I know that there are some that are aware and that are talking about it, but I'm not sure if it's. We would like your support. That'd be great.
We ran out of time, so that's it for the questioning. Do you have any questions for the panel? Yes.
I have a statement that came through the notary bulletin that don't put any documents in the FedEx boxes because they are stealing out of those type of boxes. So watch your documents. Don't send lenders, don't send any information
No,
in the FedEx.
Wow. Any more questions? Okay, let's give a hand to our escrow panel.